Welcome everybody to today's event. Really excited to be here moderating. My name is Joe Michalowski. I run content at Mosaic, and so really happy to be here moderating this panel with Matt, Peter, and Mark, all about the pitfalls of sales forecasting and how to avoid them. So I'll be here going through questions and things like that. But before we get going, just wanted to go over some event basics. We have basic agenda. This is really discussion based, so we'll do welcome, speaker intros. We'll go over kind of the main problem that we're discussing, and we'll have like 10-15 minutes at the end for Q&A if people are leaving things in chat or the Q&A. Just a heads up, normal webinar basics. You are muted. The event is being recorded. And like I said, you can use the chat as we go along and use the Q&A function to ask any questions of our great speakers, who we will now get to. So super excited to have a nice diverse panel of people here from different roles in finance and sales to talk about the sales forecasting topic we're going through. And so just wanted to hand it over to, we'll start with Matt. Matt, do you want to give everyone like the 30-second background, who you are, the role that you have, the company you're from?
Sure. Thanks, Joe. Nice to be here. Excited to meet everyone. Matt Garr, CRO at Spiff. I joined Spiff 90 days ago. After a year and a half as a customer, I've been in kind of cloud SaaS for over 20 years now, so I'm starting to date myself. I've been involved with companies from 1 million to 500 million in ARR and every step in between, every stage in between, pre-post IPO, private equity, VC, the whole 9 yards. It's been a really cool ride. Spiff is a modern commission platform, so we replace spreadsheets and old technology within companies to ensure finance, RevOps, sales have a significantly better transparency, visibility, and analytics across their commissions. So we're one of the new and emerging players in the space, and I'm excited to be here to talk a little bit about forecasting.
Sweet. Well, great to have you here, Matt. Really excited to get your perspective. Sounds like you got a lot of different backgrounds here from companies of all sizes. This will be great. Mark, we'll hand it over to you. Do you want to give everyone the same background, who you are, where you're coming from, and what your background is?
Sure. So yeah, great to be here. This is a fun topic and really looking forward to today. Look, I love the art of sales. I've been doing this my whole career. I started out as a BDR, so always had a ton of appreciation for the BDR community out there, just providing this liquid pipeline, which is great. Sold as an AE for a number of years, worked for some amazing leaders, and then transitioned into leadership myself about 12 years ago. So today, I recently joined Mosaic 4 months ago. So relative to Matt, I'm a veteran, but Mosaic's on a tear right now. So very grateful to be here. We build modern financial planning and analysis software. So we're being very well received by finance teams, especially in SaaS right now. And like I said, feel really fortunate to be here and look forward to a bright future for sure.
Love it. So Mark, also from Mosaic, I already know Mark, so great to have you here. Excited to chat with you. And we'll round it out with Peter. Peter, want to give the same background, who you are, where you're coming from?
Yeah, sure. So I'm Peter Nesbitt. I'm the COO and also the head of finance at TeamPay. So I've been in finance space for about a decade, in the last 7 years, specifically in B2B SaaS across a few companies, and had an opportunity to really work with a lot of great sales leaders, as a peer, and in many different ways in terms of planning and forecasting. And TeamPay itself is very similar to everyone else, a very modern company, a modern B2B spend management platform, replaces DIY approval systems, shared corporate cards, and really allows you to have every employee to make a request to buy anything easily within Slack or Teams and get access to company money, which is especially important today, the opportunity to put controls around spending at companies.
Love it. Well, thank you all so much for being here. Really excited to dive into the topic and really wanted to set the stage for what we're talking about. And so I'm excited to have both the finance and sort of sales and revenue sides here, because the reality is that everywhere you look, you just see that sales forecasting and accuracy is a huge challenge. There was this research from Insight Squared that I saw as we were preparing for this and saw some of these stats. It was 65% of companies are missing the sales forecast by 11% or more. 47% of opportunities actually close are actually within the forecast date. So, there's challenges with accuracy there. And just in general, just 85% of revenue leaders looking for better forecasting processes. So it's really why we wanted to do this topic, because we know it's a challenge for people, and we know that it's the finance and the sales sides coming together to make these more accurate. And so the reason or the way we're going to break this down, we're going to go through 3 of the most common ways that sales forecast accuracy goes wrong. And so we'll start off talking about kind of how sales and finance leaders, they end up working off of gut feeling and dirty CRM data. We'll talk about how to fix that. We'll also talk about misaligned expectations between finance and sales. And we'll kind of round it out with our third pitfall being failing to build enough flexibility into the forecast, because things change really fast, especially in startup world, and you need to be prepared to do that. So we're going to roll right into pitfall number 1. And so I will set the stage just saying, really, if you're working off gut feelings, you're working off dirty data, your sales forecasts are not going to be that accurate. And so we're going to have Matt, we're going to have Peter, we're going to have Mark talking about how to fix this. And so really just in general, we're going to be chatting about how do you make the sales forecasting process more data driven so sales leaders aren't left to work off of these gut feelings. And so, Mark, I'll start it off with you. I'm curious how you manage your sales team to sort of make pipeline projections as accurate as possible. What are your approaches to making the team data driven and making sure that you're setting up for success when you do forecasting?
Yeah, okay, so this is a great topic. Just looking at the question, working off gut feelings and dirty CRM data as a leader, like that just makes my stomach turn, right? That's just like, this feels awful. Okay, so the first things first is really around consistency. So it doesn't really matter how you're defining your stages or defining your process when it comes to forecasting. The only thing that really matters is consistency. So making sure that everyone's beating from the exact same drum and beating that same rhythm. So very common issue that I see is on sales teams, right? Some AEs play the game more conservative than others, right? So you might have one AE that creates an opportunity only after the second demo and they see clear line of sight to a deal. Well, you might have another AE on the exact same team. They'll create an opportunity the moment they have the very first disco scheduled, right? So that just creates wild fluctuations in the data. And then all your analytics, all your analysis are pretty much, almost useless. So consistency and making sure that you have really clean, consistent data is really, really important. So something I'll say often is like, you might have some AEs that may not agree, but it's really important that all the AEs understand or not confused by the definitions. So the 3 main data.
We'll love it. Keep going, Mark.
All right, I'm back. Okay. So the 3 main data points that need to be accurate across all ops, across all the time, are really stage, amount, and close date. And that's not something that gets updated weekly. That's literally every single time, all the time. So how do you solve for this? So first of all, you define it, right? You need to define what the stages are and your process, including when you create an op, when you close lost an op. And then in a team setting, you're having a dialogue with the team. It's not enough just to define it, but you're using real world examples with real ops in the pipeline. And the last thing that I think about is really not letting it go. It's got to be consistent. It's got to be reinforced with your one-on-ones on a regular basis. And it never goes away in my experience. It's just something you need to continue to reinforce. In terms of making your team and empowering your AEs to be more data-driven, so as leaders, we triangulate, right? So when we look at forecasts, we're looking at like 3 different data windows. And I find it helpful to help the AEs add another window into their world. So one really easy way to do that is share the average conversion rates by stage. So when they look at their own pipeline, it's not looking at just ops and their judgment. That's really helpful, but it's also allowing them to build their own little weighted pipeline. So they're looking at their own forecast from 2 vectors in a very easy way. And that certainly helps create more data and more consistency in their forecasts.
I think it's such a great point that that consistency, it's great to talk about with your AEs. And I love the perspective of kind of managing the consistency there and just doing in the one-on-ones and making sure that everyone's kind of on the same page. But I want to pass it to Matt because I want to keep going with that perspective, because it kind of starts in the CRM, because we're going to build that consistency. It starts with, having maybe certain guardrails in place to make sure that you're getting that data. So I'm curious, how do you set up data structures and set up your CRM so that you're actually getting some of these things that Mark is talking about?
Yeah, no, great point. I'm going to hit a couple things Mark said. First one, yeah. Mark, I used to call that deal date in dollars. So, stage of the deal, anyway, this is back in the day, but I totally agree. That's kind of the fundamental three legs of the stool from an op perspective: deal date and dollars, so you know exactly what you're working with. I think the other thing too, for those listeners that are earlier stage, what I throw out in your early stage processes is, set up what you need for today, but do some things that you'll thank yourself for downstream once you've taken on more money and you're starting to scale. So, data integrity early. I've been through acquisitions before where, bought 3 different companies, and it's just amazing the different levels of commitment to operational excellence that organizations have, and how much that ties to how efficient they are as businesses. So just a good reminder, as Mark mentions, that really taking care of the data you're putting in and how you're managing your process, even from founding stages, are pretty important. So to the question though, Joe, around kind of guardrails in the CRM, and I think we all, at least certainly, I believe you want to minimize how difficult it is or how many arduous steps there are in the process for AEs to step through as they're trying to move their deal through, right? We want to make them be meaningful, make them ensure they have impact, but not make it like, it takes me 15 minutes just to advance an op from one to the next. But a couple things I've done over the years that have been effective. One is exit criteria, specific confirmed aspects of a deal before it's ready to move. For example, if you've got steps that are proposal to verbal, right? You've done the proposal, you're waiting for the verbal, that you have a documented work back or go live plan or sequence of events, depending on what you call it, and the buying process timing, all that is confirmed before you move it from proposal stage to verbal stage. So you've got that in before you get there. There's also obviously some hard gates that I think at certain fields you make sure are locked down and turn red, when you hit save before you move forward, because we have to ensure together that there's data we're inspecting and it's not just gut. So, a simple example, before you move it to evaluation or demo, for example, for our platform, we really want to make sure we understand ERP, CRM, HCM in play. It informs our data structure. It informs the ecosystem that our implementation team is going to have to play within. And I'm okay with that being a hard line, because the truth is, for the AE, if they don't understand that, they don't understand some of the core keys to the deal. So I think those are a couple, kind of captain obvious ones. One other thing I throw out, this is more in the tools area, are tools like we use Troops and Slack. So when I took over an organization that had a ton of just kind of old, aged out ops because they hadn't been diligent, we applied Troops methodology, and the thought of logging into Salesforce and updating 50 records and close loss consider, no one loved that. But for some reason, when we plugged in Troops in Slack and made it more interactive, it really sped the time to get cleanup, and it created a little bit more of that ongoing interface. So there's little things you can do without a ton of cost that'll help you get to that kind of gating diligence a little bit more quickly. So there's a few thoughts for you, Joe.
I think it's great, and I think Matt and Mark are really coming at this with the sales perspective, and I want to balance it out with Peter with this finance side, because there's obviously certain things that you can come over the top with either added data or additional reports with the perspective that you have. So I'd love to hear your perspective on what Matt and Mark are saying and how you sort of support the sales side in driving that accuracy.
Yeah, I think it's really validating to hear a couple other sales leaders talk through some of the stuff I helped set up here at TeamPay 3 years ago when we started our sales team. I was like, entry and exit criteria, and using Troops to get people to update ops. I think I just want to respond to a couple comments in the chat, which I think are also very important for finance leaders. While the sales team is doing sales forecasting, the finance team is actually focused on revenue forecasting. And so beyond just the close date, we care about the split between software services, usage, et cetera, and the start dates of those things. When do we think, and then what's our sort of average go lives? And there's also a whole other sort of layer of data that finance has to kind of think about. It's like, okay, if this deal closes in May, their technically start dates in June, but they're not on board to August when we recognize revenue. And so there's a lot of sort of other details that sometimes are very helpful for finance. Sometimes we need the sales team's help on. Sometimes we can imply with averages or other sort of statistics we may have. Other sort of data that I've helped with work with sales teams on, I think, is a lot of times just asking the deeper questions and being an outside voice. I think that's a lot of the partnership that finance and sales can have. Is finance folks love looking at numbers and data all the time. Most sales folks don't. And so it's an opportunity to really just like, hey, have you thought about looking at pipeline by ICP or pipeline by industry. And I'm thinking of other ways to sort of help improve forecasting by different types of segmentation, and also just reality check the numbers as well as a good sort of yin and yang to a business partnership.
I think it makes a ton of sense. Mark, I know you and I have actually chatted about this in the past. I kind of like I know you've talked about being more of a data-driven sales leader, but I really like what Peter said about how that's not necessarily the only path to being a sales leader. So I'm curious how you kind of think about what Peter's saying here, which is really just digging deeper into that data and seeing what you can look at in different perspectives. How do you look at some of your data to make it a little more accurate on your forecasts?
It's a really good point, right? And not all sales folks and sales leaders have an affinity toward data for sure. But like when I think about running the business, there's a certain
No, I've lost Mark.
Slow down for you there, Joe.
I've lost Mark. All right. So we'll step in.
Because for Peter, no, it's okay. I totally agreed with what Peter said. I was with an organization and a private equity investor, and they blazingly and boldly said to me once, bookings don't matter. And I know that'll be unpopular to hear, but if you think about the truth of the matter, how the business is valued, it is on revenue, because bookings can have contingencies. They can take a while to become revenue. And I just think it's incumbent upon all sales professionals, including AEs, to really understand the downstream revenue side impact of what they're doing today, length of deal, how long it's going to take to get them ramped up, et cetera. So that's how the two sides really partner together. But I think too often in sales, sometimes we're just all about getting the deal done, which of course is a huge leading indicator on growth. I get it. But at the end of the day, we're not measured as businesses value-wise on bookings. We're measured on revenue growth, right? So sorry, Mark, I jumped in because we lost you for a second. You may not be back. Go ahead, Joe.
So I would love to use this as a segue into our second pitfall, because it's really about the misaligned expectation between finance and revenue. And so, Peter, I kind of want to pass it back to you because I want you to continue this idea of like where finance is focusing its attention and where sales is, because if there's misalignment and you're saying like, hey, like we said at the top, 65% are missing sales forecast by 11% or more, that obviously impacts what finance is doing. So can you talk a little bit more about that partnership and the challenges of aligning expectations across the board?
Yeah, I think that's a good point. And I think it's something finance has to take into account with their own planning. So like if it's not as big of a deal for the revenue forecasting. If I know we always miss 65%, the challenge is it's not always 65%. 1 month it's 100% attainment, the other months it's 65%. So I think that's sometimes a harder challenge with the finance side of like understanding the predictability or the believability of different forecasts. I would say that the other sort of like misalignments that happen, I think is also a good point around like Matt mentioned about just getting the deal done. There's a lot of things that happen in the last minutes, hours, days of a deal, such as discounts, free months, terms of convenience and things like that, that ultimately really impact, either revenue recognition or just the practicality of actually a customer not becoming a customer and revenue never being recognized. And so there's a lot of sort of issues like that. I think that getting tight alignment around kind of deal desk terms that have finance implications is like an important part around not just the operationalization of running sales to finance handoff, but also for also revenue forecasting.
Mark, welcome back off of a little technical hiccup, so thank you. But I'd love to follow up with you here. I'm curious how you'd like finance leaders to help you with sales forecasting. What is that perspective that they can bring to help you drive more accuracy? What's that? What are some of the data points? What are some ways you've worked with them in the past? Would love to know how you're setting up that relationship.
Yeah, absolutely. So sorry about the technical glitch there. We're going old school. Okay, so I think about first of all, I think about the ideal relationship with finance. And It's all about trust, right? So I really big believer in building strong trust with my finance partners. So in my experience, what's the universal thing that finance leaders hate? That's surprises. So for me, I think about first of all is, of course, you're going to align with the finance leaders and build your model with the KPIs in a very kind of simple framework, right? I think the question that you asked me earlier, which I was starting to answer before my headset went sideways, was really, even if you're not financially or data inclined, but having a commitment to knowing that framework and knowing that data from a KPI standpoint, what you're goaled on and what you're targeted on for the next handful of quarters, and then against actuals. So you don't need to necessarily go really, really deep as they would, but understanding your KPIs by quarter and actuals, I think, is like table stakes. But coming back to your question is, so for me, it's really about building trust, not surprising them, committing to understanding the data and knowing the data from your KPIs. And then, of course, having an active schedule where you're reviewing with them. Otherwise, you can blink in weeks. Next thing you know, months are going by and you haven't really stayed aligned, and that trust can be eroded. So one thing I'll say, like here at Mosaic, one of the things that we do really, really well is we're all very data driven, right? It's one of the really neat things and reasons why I joined Mosaic. But very specifically, one of the things that we talk about and focus a lot on is pipeline generation. So when I think about bottlenecks to sales orgs in terms of how they grow from an execution standpoint, there's really two common bottlenecks, right? It's pipeline creation and it's sales capacity, the number of people you have that can close. So pipeline creation is very much on my mind. It's on my finance team's mind. We look at it every single week, and we look at it from three vectors. We look at it from inbound, we look at it from outbound from BDRs, and outbound from AEs. We know exactly what the goal should be and whether we're pacing in these areas or not pacing. But the point is by having this active conversation and aligning with them, and they understand how important pipeline creation is, they can partner with me to help solve problems before they get big. So we know exactly when something's going sideways and it's not pacing, so we can go ahead and align to solve before that problem kind of gets bigger. So for example, if for some reason, outbound from one of the segments isn't quite working, so then what we'll do is maybe they go ahead and open up some budget so that we can go ahead and invest in some more contacts and some more targets and that type of thing. And the same thing for inbound. If inbound we're not quite seeing the results that we want, well, maybe they go ahead and open up budget and certainly align with marketing to figure out how we can solve that gap.
I think it sounds, it's amazing that you're able to accomplish that. It sounds easy when you say it, but I know really difficult in practice. So Matt, I'd love your perspective on like maybe challenges you've experienced with all the different size companies you've had. How does it actually play out in practice? Do you have challenges kind of doing what Mark is saying is so important?
No, it's all been easy and perfect.
No problem.
I will start with a funny story, though. When Mark refers to pipeline and Peter refers to downstream, I talked to a CFO who'd been involved in a couple exits. And when he was telling me about his business, he referred to bookings as pipeline. So it's interesting to have that perspective as sales professionals, that, the way he looked at his revenue model was by the time they get to year 2 or 3 on the books, then they're maturing, right? Then you see revenue growth. And so it's really, I just love that perspective, because we think of pipeline as they haven't bought us yet, right? But he was like, pipeline is what's come in over the last 6 to 12 months that's going to grow us 30%, 40% more revenue over 3 years, NRR, he's focused on those things. So it's just, again, back to the importance of understanding the two sides. Fortunately for me, I haven't had a ton of, what I call deeply challenging experiences with finance. It's been, generally a pretty symbiotic relationship. But one thing I'll throw out is the emergence of the CRO role has I think some organizations don't need it yet. Others don't know what it is. It's one of those funky titles that depending on how you define it, and I have one and have been one, it can, but doesn't have to have CFO aspects to it, COO aspects to it, client retention. It used to be back in the day, it was just chief sales officer, bring in new logos and let the rest handle things. It's evolved because of all the revenue opportunities tied to, retention, expansion, new products, alliances, affiliates, and those are all important sales motions. So, but I guess in the question of challenges, it's one thing to make sure if you're a CRO or you're planning to hire one, ensure there's clarity between the the finance team, the revenue team, et cetera, whose job it is to do what, because I think that's something that's important. The other thing I'd throw out is in the planning model stages, when you're pre-planning the next year, there's no more important time for finance and sales to really be collaborative, because with due respect, oftentimes it's like the board wants this type of growth, it's handed to the CFO, the CFO has the FP&A team build the model out, and I know it happens sometimes that sales would be left out, and that's going to be oftentimes a top-down model based on expected growth. But at the end of the day, Mark and I and people like us are going to have to ensure we can deliver on that growth. So as you get into October, November, if you're on a calendar year and you're doing your planning, raise your hand as a sales leader to make sure that you and the finance team are talking about it early, because you're going to be accountable for the bottoms up. And we have to figure out how are we going to achieve that number. Is it new markets? Is it new reps penetrating existing markets, new products, higher prices, more pipeline coverage, close rates? How are we going to get there? So that's the one miss I have seen from time to time over the years, is it becomes like a finance exercise, and it's not, right? It's everyone's exercise.
Yeah, I want to riff on that just a little bit. I'd say that is, so probably I'd say that the two places where I see the finance and sales get the most misaligned is actually around that exactly amount of there's a top-down goal, hey, we need to triple the revenue next year, right? I can back into how many bookings I need to do that. And I can give that goal to either Matt or Mark and say, go solve it, right? How many ops you need, what's the win rate you need, and then ultimately what team you need and how fast can you hire them, how fast you can ramp them. And so I think Mark's point around quota capacity is the second sort of gating factor around hitting numbers is no matter how many ops we have, if we don't have the team and it takes us 6 months to ramp a rep, then my model, there's no way we're actually going to hit our goals. And so I think I agree with you. I think that's getting involved very early on of what's even possible, what are all the different levers we need to pull and pull correctly, across op generation, close rates, all the different metrics, through the funnel.
Yep.
I think that has to be a constant conversation. I think the best way to do it is not wait to the annual planning process, but have that as a continuous process.
Yeah.
And so places where I've seen finance work well with sales is finance is on either a pipeline or forecasting call once a week with sales. They're actually there listing the deals that are happening. And also that, you're doing either monthly or at least quarterly reforecast and thinking through maybe a very detailed sales model of op generation by rep, close rate for SDRs, op generation by marketing channel. And then of course, very detailed close rates by, so there might be a very, very detailed sort of sales and marketing go-to-market revenue model that might be separate than the financial model, but those two have to ultimately align, and having sort of communication of okay, to your point, I think there's also matters around actuals. Okay, so last month we said we're going to generate 80 ops, and of those 60 are going to qualify. We only have 30 qualify. What happened? What changed? And so really understanding that sort of review process of what happened between what we said was going to happen. And I think that's how you get better at forecasting overall and better at planning, is really understanding at a very detailed level, okay, we might have missed a bookings target by 200K, but what were all the different reasons we overperformed and underperformed on different metrics that ultimately led to 200K less bookings?
Yep. I'm going to double click on one thing you said, because I think it's important, especially for scaling orgs, and that is ramp. Oftentimes ramp's huge because it can have a huge impact on how quickly you're getting to bookings and then to revenue. I've seen firsthand people use the ramp assumptions or the ramp experience from their first 10 reps and apply that to adding the next 20 reps. And I just can't stress enough that you're moving from an inbound, this is for sales, but also for finance. You're moving from an inbound, probably largely motion, to an inbound, outbound motion. You're enabling now a significantly larger team. You don't have the same people who were part of the founding sales team executing all your deals. There's an impact on ramp. So just one pitfall to help people avoid when you're doing that scale, look at the ramp experience and think more about potentially extending some of those a little bit, because it can break your model pretty quick. And it puts a lot of unnecessary pressure on the sales team to move faster than probably is humanly possible, for what it's worth.
I'll double click on that as well. Okay, so this is a really good topic. Peter, you brought it up. Matt, you took the words out of my mouth. So ramp is definitely a big thing. I'll double click on everything you said. In addition, I would say the other thing that's really important, a factor, is attrition. And that is, especially early on when everything's positive and rainbows and it's all crushing, you really have a tendency to underestimate attrition over time. And especially as you're ramping and you're adding people at scale, the reality of it is that they're not all going to work out. Especially in this market, you have some sellers that are working out that are going to choose for whatever reason to exit and take a different opportunity. So, and that obviously we're going to do a lot of things to try to avoid that in terms of development and one-on-ones and all that good stuff. But the reality of it is it happens. So if you fail to model the attrition, you'll be equally in a hole if you also too aggressive in terms of modeling ramp.
Yeah, I'd say that's a great point, Mark. I'd say in one of the companies I worked for in the past, we did this sort of calculation of like, why did we miss our numbers? Man, I felt we were doing everything right. And actually that was just simply it. We just did not have, we did 2 unplanned attrition out of a team of 6. And that's a huge hit to just your ability to work deals.
Yep.
I love that you guys are just riffing off of each other, talking about all these like aligned expectations between finance and revenue. I want to keep us on track and kind of keep us going toward the next one, which I think everything you guys are talking about kind of leads us into this third pitfall that we're going to talk about before, we kind of get to our Q&A. And it's really like needing to build flexibility in the forecasting processes. If you don't have it, these things that you're talking about, you could go, 2-3 months down the road, and all of a sudden your model has you set back months. And so I want to talk about agility. It makes sense for, obviously a startup environment or a high growth environment because things change so fast. But even, I see Jeremy in the chat mention that they're a publicly traded company, and you need agility there too. You can't just have like such a rigid, quarter long process for forecasting. And so I want to start there with Mark actually. And I want to talk about the cadence for sales forecasting. How often do you go through this process? How often do you adjust your outlooks? Is it a monthly basis? Is it like a weekly basis? Do you do it quarterly? What is the right way to approach this from a flexible standpoint?
Yep. Okay. So I think about the answer. It definitely varies. So one thing I'll also say is it depends also on the sales cycle length, right? So if you're running a very transactional business and you're running 2-week sales cycles, that's a very different forecasting cadence than, on the other end of the bookend spectrum is an enterprise cycle running year and a half, right? It's just very different. But for most of us out here running kind of 1 to 3 or 4 month sales cycles, I'll answer the question kind of from that lens. So for me, it's upfront planning for the year. And like we've been talking about, understanding the model and the framework and the KPIs. Now, the reality of it is that, I've yet to see an annual plan play out perfectly, right? So to answer your question,
what? Never?
Am I doing it wrong?
Exactly.
So it's really from especially at the leadership and an executive standpoint, it's reforecasting or remodeling if needed, but definitely looking at it and fine tuning it on a quarterly basis, right? So we run the first quarter, good. And then at the end of the quarter, as it's approaching, we have a good understanding of what our KPIs are. We're having a really clear sense of what the forecast is going to look like. We can start the planning process for Q2. Do we need to tweak what we're finding and kind of what that forecast is going to look like? And then immediately once the quarter is over, now we have real data. It's all snapped. We know how we finished. And then basically the next couple of days, it is very hands-on with the finance team to tweak and tune the forecast for the next quarter, because you want to get comp plans. And if you need to make any adjustments to quota, you need to get that out like immediately. So there's definitely like a big focus at the beginning of the quarter. Now, when it comes to actually executing and operationalizing and running the team, so from that perspective, forecasting on a monthly basis with line of sight to the quarter. And for me, I've always found a lot of success in doing that on a weekly basis with the team. And that's a roll up. AEs, managers, directors, everyone is forecasting and updating their forecasts on a weekly basis. So in addition to just running the business tight, it's also a forcing function. It forces everybody in the sales org to inspect their business and really look at it, so that if things aren't performing within their own business, AE, manager, director, etc., they can turn the knobs and they can focus in the areas they need to focus on. For example, bookings is pacing, but we look at our pipe, it's light, right? Okay, let's go focus on pipe generation activities.
Peter, Matt, I'll let you guys jump in.
I was going to say is that I think that's a good point around the annual planning piece, that ultimately finance and the board need to have the outputs, because that's how they fundraise and that's how they manage a business. And for a public company, that's how your investors invest in you on some sort of forecast. The reality, though, is the planning process, the most valuable part of it is the process part. That's the forcing function to make people think thoughtfully about their business, not just in sales, but across the business. But in sales, I think Mark, it's a really good point of like, how do you have that process-oriented piece trickle down all the way down to the individual sales rep, and have that sort of focus on, what's the sort of cadence that you can do to have these checkpoints to get people to think about like what's going well and what's not going well, and at their level of the business.
Yeah, I completely agree with both of what you said. I think systems can help at this stage too, and I don't even mean like advanced systems. Like if the thing for sales professionals to remember and remind themselves is that, and I heard art of the sale. To me, sales is a process. There's art of the sale at some point, but at the end of the day, this is a manufacturing process, and it is data driven and analytical, and it's all about consistency. So Mark mentioned weekly. And I know we'd all be surprised, but I think we're in an era now where everyone or most people are running a weekly cycle to try to drive monthly, progress, or maybe even weekly progress. But there are still pockets of organizations where that's not the case. So as simple as it sounds, when I think about systems, like one system is just ensuring you've got a very clear operating cadence with your sales team to ensure that every week you're looking at things in a certain way. I have a quick story for a company that I advised. We'll just say, 10 million ARR. And it was March 15th. I sat down with the director of finance, and there was no quarter end buzz. And I'm even talking quarter end, not even month end. There was no quarter end buzz. I was looking around for all the signs, and I said to him, well, when did they hit the panic button around here? It was March 15th. And he said, November. That was his answer. November was the answer. So like they, the plan had not been pulled through the sales organization, so they understood the importance of early, mid, early month, early quarter, early year revenue. And I think part of it was the shift, because I will say early on, it's all about getting sales. It really is. In that early 5, 10, I mean, you want good revenue, but we all know those first 100, 200 logos, you just got to get them, get them in, get them excited, make sure they're taken care of. But there's a shift that goes on around quality revenue, timing of revenue that you have to go through. And this organization hadn't done that yet. All we did is turned on Salesforce forecasting, which was free before we even bought the other products, started to build around a quarterly cadence, then back monthly. And lo and behold, we saw consistency. So it was just this funny scenario, but it's still out there in spots. So I would just say the simplest thing systems wise is make sure you've got a weekly operational cadence that will lead to what Peter's looking for, which is, as Mark mentioned, predictability, right? Predictability in what's coming.
Well, one thing I'll just kind of add in there is you talk about systems, and if you're not using a system that snapshots your pipeline, I highly recommend it. Low-hanging fruit. I know, Matt, you mentioned you like Clary. Atrium's doing some great stuff. Mosaic, our tool, does it as well, but it's so powerful, and your CRM is not going to do it for you. So what it does is, because it snapshots your pipeline every single week, it gives you a sense of how that's changing over time. And then it's a short jump to understand pipeline conversion. So then you understand, okay, I'm in week 6 of Q3 as an example, and my pipeline is sitting here at this dollar amount. I have actually fairly good clarity in terms of what that pipe is going to turn out in terms of bookings. But you need that snapshotting capability. So anyway, low-hanging fruit, super powerful.
Yeah, historical data is vital to really understanding what happened and understanding your trends along the way. Couldn't agree more. You mentioned forecasting. This is a little off topic, Joe, but as a student of the game, I'm really excited to see what happens in the revenue intelligence world. There's so much evolving around that with the CI approach, with Clary picking up CI. You got everyone playing in, and it's changing the game of the gut call and enhancing it with data that we can all use. But it'll be interesting to see strategically how that plays out, because everyone's attacking it with a slightly different vantage point. And I think from my seat, each of those input aspects add value, right? In pressure testing your deal. So yeah, I'm a 2-time Clary user, but I know there's other ways to skin the cat, so to speak. So it's an interesting market evolution to be watching from a sales seat?
I'm not even sure it's off topic, Matt, because if we're talking about agility and finding ways to do this, Peter, I'd love to throw this to you, and I guess get even Mark and Matt, both you guys weighing in as well. But just opportunities to automate any processes that support that sales forecasting process. Obviously, if everything's manual, it's going to be hard to be agile. So, Peter, curious how you feel about this revenue intelligence space. What are opportunities you've seen to get data in hands faster so that you guys can forecast more accurately?
Yeah, that's a good question. And I actually haven't had a chance to use Clarisol, but I think that's a huge opportunity there, not just in the pre-sales point, but also the post-sales point. Like, what sort of opportunities, or say, what sort of customers are the biggest LTV for us, or have the biggest upsell opportunity, or whatever you want to say in terms of, or the least churn. And so using that to actually help you target different types of customers is, I think, really important. I think also based off of, so is it not just like, it's not just bookings forecasting, is this customer going to convert, but it's like, what happens after they convert?
Yeah, big time. It's, your perspective is really interesting in that as sales, we're focused on the customer journey long-term for sure. But, a big part of what we're doing is focused on bookings and bringing customers on. But that's a really interesting point in that forecasting, looking longer term and LTV. And, certainly we start to get into like product-led growth stuff, right? And how they're using the tool and health scores. And so that's a whole fascinating space. But in terms of forecasting on the front end, I'll give, I haven't used Clary. I've heard amazing things about it. You can do, if you don't have a tool that you're purchasing, you can actually get pipeline snapshotting if you have someone internally that knows how to do it. It's kind of blunt object, but even blunt object can be really, really powerful. I will also give just a quick plug to a company called Atrium, and they're doing some amazing, really lights out, pretty advanced stuff around analysis of data and surfacing it and making it available to folks, especially that may not have an affinity toward data. So really kind of making that consumable. And then to your point, like creating systems. So it's less gut and it's more data-driven systems.
Yeah, and I rely on the weekly process. Sorry, I didn't mean to jump in too. One thing I've learned over the years is the further away from the deal you get, the less emotional you are about it, and almost in a good way but a bad way. So I go back to the simplest systems are the weekly processes. That's why we bat around a little bit, top down, bottoms up type approach. I think I personally believe you've got to do a bottoms up forecast on a weekly basis, but it has to be pressure tested. I learned that from Kevin Kiernan, but it's got to be pressure tested with data, information, with interactions with the customer, with the prospect, and with an eye as a leader on what's the disposition of this AE? How do they tend to forecast? The AI tools are getting so strong that, I know some organizations that have had them in place for multi-years, they get their, they make the machine makes the call on the first day of the quarter, and it's in the 95th to 102% range, which is great. I just made a move, so we don't have that history. I still believe in the human element of when the deal happens and what we need to do to get it to close. But it is so exciting to see what's coming. But that said, I'm just a firm believer in the bottoms up. I've seen organizations go manager and up, but I think if you want to have true accountability in your process, you got to make sure your AEs are making that weekly kind of commit to what they think they're going to see come out the back end. And that's the most baseline system there is, right?
We've talked a little bit, and Peter, I want to get your perspective here because you mentioned it first, and it was the difference between the forecasting in finance versus forecasting in sales. And I'm curious how you all handle just who owns models here. Like, is it sales modeling on their own? Like, I'm curious just like what the breakdown is of who is modeling and how is that responsible, especially if you're not a salesperson who's well versed in modeling.
Yeah, I was just going to say that sometimes you'll have a RevOps, you'll have some sort of sales ops, RevOps person or team. Frequently, they may be more sophisticated or have more just bandwidth, frankly, to build some sort of Excel model or Google Sheets model. I do think that someone has to create it and someone has to own it. it can be collaborative, especially if it's in Sheets or especially in another system like Mosaic or many other sort of like planning tools. And so I think that's an important piece of like what's the flow from the maybe a model that's some sort of like actuals that are updated each week, adjusted for every rep and every op, et cetera, and how does it ultimately flow into the financial model? And so I think that's when you think about flexibility, a lot of that is some of the technology you have and the systems you put in place to make that process really easy. So you're not trying to like figure it out either at the end of the month or the end of the quarter. And you can easily see the translation of, okay, this change in pipeline here has this impacted bookings, does have this impacted revenue. And I want to make sure I can see that not just today, but how that'll grow over time for my assumptions around churn and expansion. So I think having that sort of set up in a way that's easy for the sales and RevOps team to see and change inputs, et cetera, but also more importantly, how that flows into the overall operating model.
Yeah, Mark, what's your experience there? I know again we talked about you being more data heavy in your experience. Like, are you spending a lot of time modeling yourself? Like, what is that handoff like as far as like the actual back end modeling piece go?
Yeah. Okay. So I think the way Peter just described it was really, really fantastic, right? So your earlier question was like, who owns it and who's doing what? So from a finance standpoint, it's really a matter of aligning with that goal. And to Matt's point, like, what's the growth need to be? Let's make sure the costs are under control. We have a plan at the beginning of the year. Okay, go. So that's like owned really by finance, if you will. But now sales, we have our marching orders, and now we're like the sales ops function, rev ops function is usually the one that owns everything underneath that, the bottoms up, if you will, approach, and managing that on a regular basis and updating it. Now, to answer your question, here at Mosaic, just started 4 months ago. We're a little on the smaller side, kind of up and coming. So I do personally spend a lot of time modeling right now. And so as we build out the sales ops team, they will take over that function. And that'll be fantastic when that happens. But yeah, right now I do spend a lot of time in there just to make sure we're staying on track and identifying if things are going sideways. I want to know immediately before it gets anything bigger. So then we can course correct it, we can solve proactively.
Yeah, I haven't gotten to where I always have this Shangri-La vision where there's one view that'll tell me at any given moment where my problem 3 to 6 months from now will be and how I can solve it exactly. And don't get me wrong, there's more indicators now than there's ever been, but I have this vision. Yep. It obviously makes our jobs pretty easy there. I don't think it's there. So I agree with what Mark's saying. And if you think about it, we're modeling also on the pipeline side with our marketing partners, right? And whether that's marketing ops but it is all the way up the funnel. And I think it's important to, have a waterfall methodology. And to Mark's point earlier, not every model gets nailed, but you at least have a plan for where you think it's going to come from. What it's allowed me to do in many instances is if we're shy, like if Alliances isn't contributing, that we ramp up rep self-gen, we ramp up, put some spiffs out there for the SDRs and AEs over a short period of time to overcome that shortfall. And this is all based on, modeling and then monitoring against the model. And it's all upstream from probably where Peter lives. And then I think the other side of modeling comes later. As you get bigger, what do the deals look like? Peter mentioned something earlier that I've seen firsthand. It's like the more a deal strings out, it doesn't get closed, the more of those last second gives, and it really impacts revenue. So that's another thing as you start to scale is really understanding, what is the bookings conversion to ARR, going to look like, and how can you start to tighten up some of your closing processes? Because you're not early on, it's just get them in. I totally am with you, but there's a certain evolution where you're a viable entity. People like your solution. You're going to get more buyers. You can be a little bit more controlled in what levers you don't pull at the end, thinking about what Peter and the revenue team really need downstream. So, a couple comments there.
I love that. And there's a question that came in that we need to get to for Q&A that is exactly along these lines. So I want to keep us going because we got about 8 minutes left. I want to make sure we answer these questions. So, before we get to those questions, I just want to jump in and say that Matt, Peter, Mark, you guys are amazing. Y'all are obviously really great at what you do. I really appreciate all the insight here. I, came up with these key takeaways based on the outline we had. There's obviously so much more nuance and so much more expertise in what y'all said, and we're going to kind of follow up after the webinar with some of that. But honestly, it's really just like these 4 basic points. Collaboration is key, and that's what we're going to get to in this first question. But clean data, all the guardrails we talked about, making that happen is so important. Becoming more proactive and more flexible in the modeling, and really just automating where possible. I think those are kind of the 4 pillars of really all 3 pitfalls that we've talked about. But I don't want to spend too much time there. I want to make sure that we answer Claire's question, which is exactly around the biggest challenges and misalignment between finance and revenue, not just in general, but at different stages of growth. So Matt, you were talking about how, that model might change or become more complex as we move along. So whoever wants to jump in first would love to hear kind of like maybe like a Series A startup. What are those challenges versus when you get more mature later down the funnel? What might you experience between finance and sales?
Okay, I'll jump in. The numbers are always different. Every company is different. Every industry is different. But to me, up until 10 million ARR, some maybe 7, some number there, it is about getting ICP customers. And ICP will change. That's the other thing to keep on. The ideal customer profile may evolve as you get your product out. So I guess I'm speaking less to the $0, but more, a couple million and moving up.
Sure.
And I think finance, honestly, arguably, there could be friction points, but I think at that stage, I would hope our finance brothers and sisters are excited we're bringing in consistent revenue each and every month and quarter, right? Because then you get a viable business. If you can get to that 10 million mark, which is a low percentage that make it there, you're really at a size where you should be able to continue to scale and grow. A lot of things have to go your way. Then I think from 10 to call it 25, my humble opinion, which may be, Series C, maybe it's early C, who knows, that you start to focus on what quality revenue looks like and make that behavioral change. It's not overnight though. And it's going to, because remember when finance says no T for C, they got to pay up front, they got to do all these things. The first 200-300 customers we were pretty flexible with. So you have to build that behavior within the AE team. When you bring in that next group, you got to train them the new way, and you still got to work that old, kind of get deals at all costs kind of sense out of the AE team. But if you explain the why, which is, hey, this is quality revenue, which means the options you got for being a founding participant in this team are going to be worth that much more. But I do think that's where you start to shift. But even at that stage, I don't love hard lines. Like, we will never do this. Right. I think you go, hey, how do we run the plays to minimize that? How do we take it from 70% of the time we let that term go to down to 30? And then as you're really scaling out, then you can start to really focus on, I think, ARR for growth, which is not just bringing them in, but, so maybe this is 25 million and beyond. Maybe it's sooner, maybe it's 50, but it's like, by now you should probably have multiple products. Maybe you've got some alliance opportunity. You have upside revenue tied to it. So you're thinking of the customer, not just in terms of their initial bookings value, but what's the customer lifetime value look like? And I don't think these are friction points with finance, but I think they're important conversations to have as you evolve at those different stages. So there's, a couple thoughts, Joe. I'd love to get Peter's bounce on that because, maybe on the finance side, it feels differently.
Yeah, this is really interesting. I was thinking about that as well. I do think that there's like this sort of maturity that happens along the way. And I think maybe once click below, seed stage to A is like, let's just make sure the CRM is set up in a way that's serving finance. And I think, and people are actually using it. And I think that's been one challenge I've seen in a lot of companies is like, the data is really bad. And like someone has to own it. And until you have a good sales ops or rev ops leader or a finance person who just forces it, frequently it's not, depending on the sales leaders who may not be like, as data driven as Mark or Matt, that they've survived with it. And so I know I've had to do massive cleanup projects at all the companies I've been at, and to just get data that's useful for the finance function in terms of forecasting on a revenue side, let alone even reporting on ARR. And so I think at the earliest stage, it's around like, let's be all aligned that we want to operational excellence is going to help everyone. Then from there, I agree there's a level of like how can finance get comfortable with the sort of like the deals at any cost and what's that look like? I agree, Matt. Like, I don't think it's a problem doing that. It's just like knowing how that is going to translate to revenue, and like knowing that we're going to have to take a discount off this because of terms of convenience or whatever it might be, and that's okay. And I would say that then, like at the later stage, I would agree that at some point you have to make the switch to a more revenue focused versus a more bookings focused like view, and that's probably the time you have a CRO, someone who really truly owns the full funnel.
I love the interaction with the finance org because they challenge you, right? Also remember, and we're selling, some organizations sell into finance. Our finance teams are buyers of SaaS. They go through their own processes. And I think that's why it is important to listen to them. They'll go, hey, I never agree to that term because so-and-so tells me I can't have it. So why are you offering it? So I do think, but they've also never usually carried a bag, had the 3 or 5 competitors you have. But as long as it's a listening and it's an exchange, we get better as sales professionals listening to our finance team where they push back on certain things, like because it challenges us to get better and grow and hone our craft, and really direct the deal better than do whatever it takes to get it done, and that to me is kind of growing up as a sales professional too.
I love all that. We've got literally like under 2 minutes. I've got one more question. So Mark, I want you to jump in here, and if you can give us like the shortest answer possible to what I assume is a more complicated question than that. But it's Ryan asked, for SaaS startups that are just starting, how should we think about retention and expansion in the forecasting process? Do we assume 100% churn, no churn, or some other benchmark? Is there some way that you can forecast that out?
Okay, so that is a much probably bigger conversation. Yeah, but it's interesting. We're talking about the relationship with finance. And if I'm just starting out, put myself in the seat of a very kind of young organization, I'm trying to figure out churn and how to model that. I feel like that relationship with finance is so mission critical because you're going to take some educated guesses, but the reality of it is they're probably going to be far off if you don't have a lot of data. So it's like you put your assumptions together, you put your model together, and then you just stay tight with the finance folks on what you're seeing, and then tweak and tailor. But yeah, there's a lot more there. I find it's very industry specific. It's also very pricing specific. Yep. So if your pricing model has natural upticks and upsells involved, that will play a massive role. Versus if your pricing model is more fixed, kind of all you can eat, and that has a big impact on the upside, your LTV calculations, for sure.
Love it. Well, we will wrap up there and maybe get to spend some time on that question in a future event, because I know I would have loved to get Peter's input there too. But thank you everyone for joining. Thank you, Mark. Thank you, Peter. Thank you, Matt, for all the great insight. We will be in touch with a recording of the event. We will be in touch with follow-up material on how you can learn more about this topic. But this is a lot of fun for me, so I appreciate you guys being here, and hope we can do it again soon.
Thanks, everyone.
Thanks, Joe. Thanks, everybody.